Let's see. Nothing yet. Okay, the recording started. That's good. At least something's working. But I can see that. There it is. So somehow there was a delay. Okay, thanks for your patience. Finally, we can kick off, and it's working. Great. So thanks for all your comments there. We're going to start taking a look at the charts and the Forex charts in just a second. Be aware, though, that this webinar is intended for a global audience and may not be suitable for everyone. Please take that into consideration. And to get info about that and other details and conditions, visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, trading for exchange and global financial markets is considered high risk and may not be suitable for all traders and investors. Therefore, please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. And by continuing watching this webinar, you agree with this disclaimer. So today's focus, we're going to take a look at moving averages. And we're going to use moving averages for determining the trend, looking for support or resistance, understanding the momentum or contraction, and trying to use them as a tool for perhaps even trading decisions. All right, but before we actually take a look at the charts, quick look at the calendar. Tomorrow we have FOMC. That's a big thing. Today we have some GDP news on the pound, and CB consumer confidence, and some other green and yellow news events. Alrighty, euro dollar. Euro dollar showing some bearish candles at the moment here as it's retracing lower. And well, basically had a very strong rally yesterday. Looking at the 4-hour chart, you can see good momentum candles, in fact, showing that upside. So at this moment, this downside on the hourly is still a retracement on the 4-hour chart. We have clear higher highs and higher lows. And if we add the moving averages to that, and if you're interested in the moving averages that I use right there, then basically what I'm using here in this case are 5 moving averages. 3 of them are connected to 21 high, 21 close, 21 low. And 2 are long-term. That's the short-term. 21 is the, let's say, momentum or intermediate trend. And the long-term here is long-term trend, obviously, or semi-long-term. 144 and 169 EMA close. This particular indicator, in case you're joining for the first time perhaps, shows whether the angle is bullish or bearish, and I find that pretty useful. And it's easy to spot what the kind of trend of the particular EMA is. Now, obviously, when these two are aligned, when the 21 is below the 144, you have a more serious trend going on. All right. So when price was below the orange here and the long term, we had a clear downtrend and a nice move down. But price also used the 21 in an uptrend. However, it was still below the 144. So it's kind of caught in between. That is a retracement. Right? So when price moves away from the moving averages, it's with the trend setups. If it moves back to the moving averages, it's a retracement. If it moves back from the 21 back to the 144, it's a retracement, more of a, actually, I would say that back to the orange one here is more of a correction. Back to the purple is a retracement, and if it breaks above the purple, we're maybe seeing a reversal. So you can basically mark the territory depending on that. Wait, I don't have my drawing to open. 1 second. Like this. Right here. Right there. Correction, the reversal, the retracement, and then reversal territory. So we're getting into that reversal territory. But, there's one big but, there is more often kind of a poke through that long-term And it really depends how price behaves here, because sometimes you get a poke through and it starts doing like this again. So it's quite a critical level, whether we get a bounce or break for the long term here, or for at least the next, let's say, week or so. All right, so from that, that's a quick explanation how we can use these moving averages. So will this zone right in here, about 110, where we have the band and the long-term moving average, the 21 band and the long-term moving average, this top, probably about halfway this upside here if we fib from fractal to fractal, 50 fib at 110.25. Will that be a bouncing spot? I think yes. And will it continue up to the target? Or will it see some weakness perhaps about here? Something like this seems likely. So for the moment, I think more interesting for potential longs, as a bounce could be expected at the 38.2 fib. Doesn't have to be the 50. It could be the 38.2. It could be the 61.8 or the 50. Those are most likely bouncing spots. Considering this particular trend, higher highs, higher lows. From a daily perspective, we had a big bounce at 108, and we're seeing a rally ever since. But there's reason to be cautioned because this is still resistance right here, 112-ish. So as we get higher and higher to retest that resistance level, there's also a higher chance that we might bounce off that level for a retracement back down. Something, for instance, if we do get the retracement and we move up, we could hit that level and then move down again. And that's why we see so many ups and downs in the market. But something like this would not surprise me based on the various time frames that we've looked at, right? So we have this upside swing momentum. One more push up could certainly happen when looking at the lower time frames. One more push up after down, something like this. Retracement up, test the top, move down again, and then we'll probably see again support kick in. Who knows? This could stay in a pattern longer than we think. The alternative, obviously, is something like this, and we break. Or who knows? Obviously, when you hit this point, we're looking a bit quite far in the future. It doesn't make sense to talk about it that much because there are a lot of variations possible at that point. It really depends how price reacts. Will it make a bear flag, a bull flag, or will it move this very fast and then start making a bear flag? Yeah, that all depends on how things develop at that point. Obviously, from a long-term perspective, this resistance and this support are important. When those levels break, then there's that chance for bullish or bearish breakout. Until then, price is within this kind of range area. And within that range area, on the 4-hour or 1-hour chart, I would say there's a chance for a bounce here. All right, so from the 30-minute point of view, let's dive in a bit further. 50-minute point of view, we've actually reached the long-term moving average on the 50-minute chart, which in itself is an interesting spot. As I said, that could be a level where we can reckon with. Let's see how far we are from that 38.2 fib. 110.50 is about 15 pips away. So just a small little dip and we're already hitting a shallow, but yet still a level to think about. So how to look for longs? Let me take a look at our chart. I think personally, let's see, using time factor, we're in the 15th candle here. And this is the 4th candle. So from that point of view, definitely in a momentum to the upside. Alrighty. I think probably the best would be thinking about which time frame I think I like the most. Maybe the hourly. Maybe the hourly, a break above A simple break above this candle high already could be enough, or this fractal. 111, a break above 111, a break above 110.80-ish on the early side. The alternative obviously would be if price, we don't know how far price can fall here. I don't like the shorts because although there is some momentum here, the fact that price could bounce here or very soon doesn't give me a great reward to risk. If I go short here, I got 50 risk and I have maybe 15 reward. And it's a 50-50 trade. That's not a winning proposition. So shorts are not interesting. Yes, there is a chance it could go lower. It could go all the way here. Who knows? No one knows. But I don't want to rely on that for my judgment. And if it does do that, then tough luck. I'm not interested in it because on average, it's not going to provide enough value. So what does provide a value, if it, depending on how far it goes, there could be a reversal candle somewhere here, a candlestick pattern reversal. That could be an alternative as well, something that shows the turnaround. Sorry about that. Someone's asking if I'm in the webinar from Admiral Markets. Let me confirm. Let's see. We stop in webinar lasts till about an hour, right? One more hour. All right. So yeah, you get the point. If it does push lower, which I wouldn't want to reckon with to take a short, but if it does, and there is some engulfing twin or some bullish candlestick pattern on an hourly or 30-minute chart at 110.50, at 110.25, at 110, those could be all turnaround spots. So either the break, you know me, I'm always looking for options, and this could be one of them, and here engulfing twins could be the other. From my perspective, shorts are not that much in play unless really price gets up to here, for instance. Let's say at the end of the day, we see some exhaustion, price pushes up all the way to 112, 12-ish. There's intraday divergence, perhaps multiple, preferably on the 15-minute chart. There's, prices may be at a S2, for instance. Sorry, R2 on the daily pivot. Those kind of things, maybe then a reversal back down off of that resistance is an option. All right, so I think that is it. These are the last few days in July, so it should be still okay. Tomorrow's FMOC, those things we have to be be careful of, but otherwise, I think that any Eurozone news, you never know. That could be something to reckon with. By the way, there seems maybe to be some webinar conflict, I think. So if by any chance this webinar just boom ends like that, for whatever reason, then it probably has to do with that webinar conflict. Just give you a heads up. I hope it doesn't happen. If it does happen, then you know why. There's some uh, double scheduling, perhaps. So if it does happen, then you know why. But I hope not. But I'm already warning you if it does. All right. Oh, okay. I gotta. Okay, no, it's not that bad. Actually, we just have to close at the top of the hour, next hour, 1 hour from now, and not 1 hour, 15 minutes. So that's not too bad. Alrighty, pound dollar. Pound got a bounce at the 61.8 fib right here. And, well, broke above this resistance. Anyone who looked at the weekly recap that I have on Mondays, I was looking for that break for some upside. Now, so far, it's becoming a bit messy. I mean, we still have a nice channel here. The price is really quite hesitant right about here. So yeah, it's coming a bit choppy, sloppy. Let's see, what day is this? Ninth day. Yeah, from that point of view, according to my time rule, I would be waiting a couple of days before I would take a breakout here. It doesn't have to mean that a breakout cannot happen, but it looks like we're in a consolidation which can last till a few days. So I would probably, from any swing trade perspective, not take swing trades this week on the pound dollar. Yeah, I think that if it does continue lower, obviously the 78.6 fib and the trend line here, confluence at 154, that could be sweet and a very nice reward to risk. A break below that and a break below this bottom would invalidate it, and we might see a decent breakout. So that 78.6 is a good bounce. Below the bottom, a breakout potential. Not that I would take an entry order here, by the way, below the breakout, but I would start looking for shorts. 78.6 could be different. I don't think a pending order is anything wrong. Stop loss below the bottom. It's a spacious, for some of you, perhaps spacious 80 pips, but 90. But if you look at minus 272 target, it offers 380 pips. So not bad. And if aiming for the minus 61.8 target, perhaps more, perhaps almost 500. So pending order at a 78.6 fib with a trend line there has to be at least a 50-50 setup. Now, considering the R2R on the long term should be positive. Now, besides that idea and the bottom break, I don't see much at the moment. I think really it's going to go sideways for a few days until this consolidation pattern is finished. Yeah, and today specifically we have pound news. Let me look. Is there anything else with the pound for the rest of the week? Let me take a look. Let me add some moving averages. Oh. Moving averages are also quite flat. You see that on the hourly? They're not really. 4 hour too, you see that? I didn't look beforehand, but it's kind of confirming the consolidation here, the corrective zone. Daily too, isn't it? Quite funny, in fact. Weekly, pretty flat and narrowing. There is some space between them. One thing it's good to look at when using moving averages is are they intertwined? Are they mixing into each other? And here you can clearly see there's no space between them. No space. No space. So when there's no space like this, the average of the 21 is right on the average of 144. So that tells us that there is no pace here. So from a moving average point of view, it confirms that it's not that interesting. From a fib point of view, because this was pretty momentum move. So from that point of view, if we do get a break, let's say below this trend line, right here, we would, in this fractal, we could see, maybe probably is zigzag down to that minus 272 target and the 78.6 confluence, something like that. This is one momentum, and then we can see another momentum like this. All right, so besides a long potential here and the break of the bottom that we mentioned here, that could be on a lower time frame, this 4-hour time frame, something to reckon with. When the fractal and the trend line break for this downside down to the 78.6 fib. Now, would I take a pending order? Let's see, 154.70 would be my entry. My target is 154, that's 70 pips. The stop loss would have to be above this 4-hour fractal. So you're looking at 130. So 70 pips for 130 pips. I don't think merits, yeah, it's not worth the pending order. I would not put a pending order here. But it doesn't mean that if price breaks through it here, that I wouldn't look for a short in intraday perspective and try to get a tighter stop loss so that the risk here is more in balance with the reward. Alrighty, 50-minute chart. Obviously, if price can break this trend line, it could bounce off that trend line too. So to see if price can bounce off this trend line, or at least have potential to do this, I think a lower time frame, probably 30-minute, 50-minute chart could be interesting. Now this is quite choppy, so let me refresh this. Alrighty, this is probably still the last swing high, swing low when using fibs. All right, so I was just talking about the break potential here, but that the pending order wouldn't make sense. But keeping an eye on the chart perhaps. And if it can break, it can bounce off the same level. 61.8, 78.6 could be bouncing spots. Let me take a look at the Camarilla. L3, L4 could be bouncing spots, I would say. So from that perspective, I wouldn't be looking for shorts that early here, considering the support that is still nearby. And from an intraday perspective, perhaps a break above this resistance trend line here could be a breakout like this. And here could be below the L4. I think really at least below the L4 before shorts, and this could still be a bounce. But okay, that's just in theory. Would I like to trade it? I'm not a big fan due to the moving averages. I think there must be something better. Let's see the news. Yeah, no, it's only cool. So today's pound news on the GDP is the main one for the pound this week. Dollar yen made a correction down to the minus 61.8 target and the 38.2 fib. Nice bounce there, but it is approaching resistance. And from that point of view, probably the rally will be limited. And well, I would think make a hook back right here. If it does make a hook back here later today, could be interesting as a reversal trade. The other option could be to wait for a bounce back here actually and see if it could make a pretty quick decline to the 50 fib. I don't know. It's possible. Let me take a look. I'm not too big of a fan of that. Let's scan some other charts. Audio is the 50 fib at 73.40 right here. 61.8 fib. This is, yeah, making a retracement now. quite a small range. We can probably see that the Aussie did not make a lot of movement. Let me take a look at this heat map. If you want to take a look at the heat map, you can go to Analytics and then click on this heat map. And what we'll see here is the movement and the volatility, the range versus percentage change. Euro odd is high, Euro CAD is high, pound Swiss, pound New Zealand, pound odd, pound CAD, Euro dollar, Euro New Zealand. But where's the Aussie? The Aussie is the worst one. Look at that. And when looking at the slowness, or I don't know, looking at the chart, I'm not surprised. It seemed like the Aussie was a bit of a winter sleep at the moment. So one of the one reason why Aussie might be a good one to skip today. Pound also not at all much. I mean, not much better. It has a bit more volatility, which is logical because the pound has that on average. Actually, on average for a pound, this is probably on the low side. The dollar Swissy is just as much as the pound, which I think says already something because the dollar Swissy doesn't move that much normally. Dollar yen is on the low side, so those are perhaps less interesting. So obviously, it doesn't look good for intraday trading, but from a swing perspective, still I think that this 5061.8 can become a nice resistance spot. That would mean Aussie weakness or dollar strength. Let's see, dollar strength would mean euro and pound down. So or Aussie, yeah, I don't know. I think it's a good resistance zone. I'm not sure exactly regarding, if it's something worth trading today, but yeah, in as a swing trade, perhaps yes, from the 61.850, something to think about. Let me take a look at the others. Let me skip these particular pairs. Let me go to the ones that had a good count, like Euro odd, Euro CAD, pound odd, pound CAD, pound Swissy, pound New Zealand. Alrighty, Euro odd, pretty hefty upside. Let's see. Well, the same story. I mean, in such a as the euro. Let's see, which one was it? The euro dollar. Same story. Really not much different. But this upside was even stronger. So what do we have here? Well, we have a ongoing push momentum in a uptrend. Look at the gap between the long term and short term. So again, looking for a bounce really. Thing is that the 4-hour chart just posted a pretty strong 4-hour candle to the opposite side. All these 4-hour candles here were quite small. This one is quite big. Yeah. So from that perspective, I would need to see this 4-hour candle close. Want to see how that looks like. Perhaps if it looks like a doji, it could be worth it. Now, if it's bearish, I would not take it. If it's anything bearish, because then it's still a continuation of this big candle. That is a big candle. Wouldn't want to underestimate that. Yes, we are in an uptrend. Yes, we have a big momentum, but still, we want to see this retracement, lose its steam before trading into the upside. So if it is a bearish candle, not. If it's a bullish candle, I think it does give some perspective. Let's see. I would like to see continuation in the next few candles. If it takes more than more than 4, I would be cautious. And exit. If it is a doji here, or bullish candle, stop loss below yesterday's low should be okay. That should be a bouncing spot, and I don't expect price necessarily to break through that for the moment. Should be okay as a stop loss. Oh, let's see. I got some questions. Before I move on, let me take a look. Let's see. Last 48-hour moves, last 2 days. Good question. Well, I don't know. I would agree with you. I don't know what the difference is. There is some difference apparently, but or at least in the calculation, probably yeah, it could be the last 24 hours indeed. Makes sense. Good thing. I will send a message about that. Alrighty. Let's see. Long-term direction of audio is D. There it is. Alrighty. Audio is the long-term big downside momentum, big trend down. Everything is very bearish and yeah, stays bearish. With the euro and pound dollar, we had pretty big retracements so far to the upside. Odd USD really didn't have that much. We had a bit of a rally here, but it was nothing compared to what we saw in the others. Didn't even reach the 38.2 fib, and we already broke the bottom below 75. So different ball game there. New Zealand yen. We can take a look at that. Seems. Oh, New Zealand yen high. Let's take a look. Swiss yen. New Zealand yen. Yeah, that was move today indeed. I like this one from yesterday. Well, let's see. Let's go back to the euro odd. I think that both are possible. I think with the support level, a pretty sturdy support level close by, an entry on the doji is okay, as it makes the stop loss more manageable, I would say. Waiting for the break of the high makes that a bit, makes that a bit bigger. If it, the other option could be to wait for the break of the high, but then use the low of the doji as a stop loss instead to move it up. That probably would make about the same size. It could be another option. Oh, let me take a look at. Let's see. Another way, I mean, we are getting into, I think, a bouncing spot. I mean, I don't like this 4-hour candle, but it doesn't mean the end of the world. It's still an uptrend. It could still easily get a bounce to retest, even if it is or becomes a head and shoulders. Worst case scenario, let's say. Something like this. There's still a good bounce potential here. Up to at 152.50. So from that point of view, I think we're more of a bounce, as I said, bounce potential near the yesterday's low. So the other alternative could be, instead of waiting for the 4 hour chart, which is nothing bad, but on a 5 minute chart, 1, 2, 3, 4. This is the fifth candle. Oh, sorry, I moved my PC. This is the fifth candle. So yeah, another 5, 10 minutes, and if it makes it makes a bit of a dip like this, I might look for a very reversally trade, but with a good reward to risk. There's a single divergence, not a lot, better than nothing. Obviously, it's always risky because at the moment the momentum is down, but it could be a reversal trade on this time frame. So let's say this is 1, 2, 3, 4, fifth candle. Fifth. So I'll give it this one and next one. So 8:30 London time. 8:30 London time. If by 8:30 it doesn't break this bottom, could be a reversal trade, and I would give it another 30 minutes. 30 minutes to basically make some kind of rally till 9 London time. If it doesn't make any rally by 9 London time and it just goes sideways like this, then it could be good to exit, because it could be just a very simple bear flag and could still push maybe lower. Make one more push maybe to retest yesterday's low, 156, 150.60. All right, so I can come back here in a few minutes. Let's see. Yeah, pound New Zealand. I was talking about pound New Zealand. This, in fact, showing some weakness. We got 21 EMA being used as a resistance. Right here we do have a 144 as support, and we had actually already multiple dips attempting to get to that 144. Here was the first break. Here's the second. This is the third one. So I do think that the pound, against New Zealand at least, has a chance to make the downside. We see a trendline break here, price below the 21. I think we're in a pretty sturdy downtrend channel. This trend line coming in. So at this point in time, I would say that although this momentum could still be important in the future, it would first have to break above the resistance trend line, which I'll change into an orange color. So any upside is only really interesting if it breaks above the resistance. Then something like this, momentum indeed here starts to have a role, because then this could turn out to be correction right here. For the moment, I don't know when that's going to happen, and it could keep pushing lower, lower like this. So I don't want to necessarily only wait for the break to the upside. So a short upon the break of this fractal in the trend line, I think, is okay. As you can see, took that on this demo account, and I'm in that trade. So let's see. From that point of view, any hook back could still be, I think, an entry. Let's see. trend line on daily chart, 154.65. Oh, that's the pound dollar. Okay, sorry, I thought you were talking about the pound New Zealand. I'll take a look at that in a second. Pound New Zealand on daily is an uptrend indeed, so something to be aware of, that the downside potential from that point of view could be limited. And let's see, let me put the fibs on. Ah, let's see, minus 272 target is the first bouncing spot, 232. Could go down to the minus 61.8. Those two levels, I think, are the main targets. Alrighty. So from that point of view, let's see, 1 second. All right. From that point of view, any pullback, I would say, back to the trend line here could be an interesting spot. You got kind of consolidation zone right in here. So if it pulls back to that level, that could certainly be a decent resistance zone for more downside. 2,350, 2,370, 2,3475, 2,3450. Let's see, shouldn't the fib be to the next swing on the lower side, this one? Well, it depends how there are many ways of fibbing. Um, if you fib it from target to target, then basically this will be the fib because this was the first swing. Target got hit here, so I can move the fib from here to here. Target got again hit, so I get move the fib from here to here. And what happened is that the top got broken here. So that's why I moved it back to the original swing because the top got broken from here to here. And when we put the fib from here to here, it went up to 61.8, made a dash, broke the bottom, moved up, and that target is still open. So it depends how you really fib it. I mean, from that point of view, from this, using it this way, it would be no reason to move that fib because this is the swing, got respected by the 61.8, so now waiting for those targets. Just that it missed it doesn't require kind of that moving the fib lower necessarily. Well, I mean, you could also, of course, move the fib from this one to this one if you feel comfortable that this top will hold, which makes sense. And you could use that, for instance, too. You could also, I mean, you could use this necessarily, although and see this as and what move down. One thing we can use is perhaps an hourly AO. Let's see. According to the AO, this part is one piece. This part is one piece. This part is one piece. So from the AO perspective, those would be all separate swings on 1 hour at least. From the 4 hour, yeah, it's still probably one movement. So I would be probably more inclined to use this or this. We have a 61.8 here. Let's see. Someone mentioned the yen, I think. New Zealand yen. Let's take a look. New Zealand yen. Okay, I missed Beverly's first question. Dow, DAX, and S&P. We can take a look in a second. First, New Zealand yen. Well, it is breaking below the 21 EMA. That is interesting. That could indicate some interesting New Zealand weakness, but it's only the first break. So I would say it's more of a bouncing spot, and if it breaks again below the 21, then a bigger reversal potential down to the long term. But this uptrend is certainly looking like it's going to be over, and we can get into a period where price, after correction, most likely continues, I would say. But at this spot, you can see also price is at the 144. It's probably at a target. So if anything, despite the bearish break of the uptrend, this target will probably give a boost back to the 21. That seems the path of least resistance at the moment. So it all depends on which time frame you're looking at. We're looking at multiple time frames. Obviously, this is a consolidation, so a break of that could lead to the rally, which is actually a correction on the weekly, and we could bump into the resistance right here. So if we move down lower again, what do we see here? A nice triangle. Break above the triangle, we get the bullish rally. Break below the triangle, we might get an extension of the bearish fall down to the minus 61.8 target. And I'll put some levels. Let's see. Let me change the fib or add a fib 1 second. From here to here. All right, any of these fibs could be turning around spots. So back to the 4-hour, a bullish break could go up to the 38.2, perhaps the 50, perhaps the 61.8. But this zone would be the main part. Bearish break, and we would see price have the potential to fall. Let's see. To this confluence here, 61.8 target and a minus 272 target. Yes, I would say those zones probably. All right, let me go back to the euro odd. I can see it was 5 minutes ago that we had 6 candles. This is the 7th closing anytime soon, or already has closed. And we see that this bottom break has, or this bottom has not been broken, which means that this could be the start of a bounce. So from that point of view, this is candle number 8. Yeah. So I would try here a reversal bounce off the 61.8. Stop loss just below the bottom. Target with the target in mind of the 4-hour potential. It's not confirmed, but who knows? A very conservative target, I would say, at 152.50. So let's see. That could be if it gets that deep, because who knows? It could keep climbing like this. That sometimes happens. And that's why if someone really likes to trade, sometimes it's just warranted, or it's better just to take a market order right at the close of the 6th candle, which would have been in this case somewhere up in here. But sometimes you don't get the pullback. In this case, I want it, but doesn't mean that I'll get it. So I'll put it pending at 151.30, 151.30, and the stop loss 150.95. About 35 pips, not bad considering the big range on the euro odd. Maybe a bit high for a 5-minute chart, but still. This moment, I mean, reversal in the sense that this is a downside momentum on this time frame. If we only look at this time frame, it's bearish, right? It's looking down. On higher time frames, we see that bearishness could be just a retracement for potential twist back up, and or let me say it this way, on a 4-hour chart, the trend is up, so this could just be a slight pullback for more upside. So despite the 5-minute bearish look, it could be just a simple retracement on a higher time frame. But if we just focus on the 5-minute, a long here is a reversal trade because of the downflow that we have here. So from that point of view, that's why I consider this a reversal on this 5-minute. Why the sixth candle? Because in this case, this was downside, correction, downside, correction, downside. When is the downside over? When we have a decent number of candles here not breaking that bottom. And now we have that same. Just like we had it here, just like we had it here, we could have it here. Now, those previous two were not good reversal trades because they only went sideways. But this one could be different. This one is showing some steam, first of all, here. And there is already divergence as well, at least a single one. Plus, we have yesterday's low close by. Those are the differences. Okay, let me scan for some more potential. Euro yen is still pushing up, and I've locked this one in for small gain, and it's floating up well into a decent number, about 160 pips. And as soon as this candle high does not get broken within 6 candles, I'll close that trade for this swing trade. So far, it still looks like it still looks good as long as it keeps pushing. And actually, there could be another breakout if next hour it maybe pushes through this level. That could be a continuation, perhaps, on the euro yen. Pound yen is could be the same actually. But the moving averages are quite intertwined. Let me take a look at the euro yen. I think that will look better. Actually, surprisingly not much. Perhaps the downside here was stronger than because if you look at the 4-hour chart, you only see really substantial upside, not much downside, but still that old trend weighing in pretty strong. Let's see, 6, 7, 8 can be any number you mean. You just need to see some up move in the lower time frame as overall trend was up. Well, the numbers are specific, but we're going to have a strategy webinar on it tomorrow. I think it would be, or if you can't join tomorrow, you can take a look at tomorrow's recording or last week's recording, and we dive into all the details regarding that strategy. That would be more, I think it would be better for you. I can explain it maybe shortly now, but tomorrow and last week we dived into it, I think a whole hour, so it would be better for you, I think. Can you make it tomorrow? Or I have the YouTube video. You can find the YouTube video on Admiral Markets channel from last week. Great. So let's see, pound odd hit the target. Here I'm long 2, and yeah, would exit the same thing if 6 candles don't break that high. For the moment, it's still breaking and still pushing with higher highs. Euro odd could be the same as the euro odd in the sense that it is at support. There is just one difference with the pound. The pound looks at the moment. I think I want to see and wait still what the pound is doing. So it could be a bouncing spot just like the euro odd. From that point of view, they're pretty similar. I like the euro odd a bit more because of the euro side. So I think only maybe the euro CAD pound get they're all pretty similar. We got euro CAD pushing up a lot at a bouncing spot. Pound CAD at the moment showing the same hesitation as the pound odd. Perhaps this to be careful of. But if it does break above it, it could be a breakout trade. Yeah, it's kind of a similar situation. So let me take a look one more time at pound dollar. I think Jenny was asking something about that. And then let me take a look at the DAX. I think S&P 500, right? And one more Beverly mentioned. The Dow, yeah. All right. Jenny, you were asking the daily chart. This trend line, perhaps? Let's see. Or maybe did you use this trend line? I'm not sure. I'm not sure which trend line you mean. This one, right? This green one? Yeah. Green one is it's a good trend line too. And definitely was a good extra confluence with the 61.8 fib. Definitely. Um, which one is more important? I would say, yeah, I would agree with you. The green one probably is more important, but I wouldn't exclude the orange one because of the green one. I think both are equally, valid. Green one has a steeper angle and therefore is very useful, perhaps even more important. But I don't think that because the green one is more important that the orange one is not something to reckon with. The orange one has also a good structure to it. 3 hits, 4 hits, many confirmations. So if the trend line, if the price approaches the trend line there, I think it's still a good one to keep an eye on because it could easily be a bouncing spot with the 78.6 fib. But if it does push through the green one, then as we were looking at on the 4 hour, we got some space to the orange one indeed, right there. Let's see, DAX. It's been a while since we looked at that. I remember that's I don't know. Unfortunately, I don't remember. There was somewhere here we were looking for downside, and well, whatever. Um, weekly chart is in 16th week. Let me put on the moving averages. Ah, cool. That's good to know. I think we were looking for a bounce, wasn't it? But I am not 100% sure. I think it was a bounce here or here, but could be the first one maybe. But in any case, let's see, let me take a look at the monthly. Getting into interesting spot. If this is the first attempt to break below the 21, and this is the second, that could indicate a decent chance of retracement further down to 9,500. Um, Back to the 21 band basically on the monthly. Now we're not there quite yet because we do have on the daily pretty thick support levels coming in. And that's not going to break without some kind of bounce, some kind of support kicking in, some struggle there. And the 4 hour chart just doesn't look interesting at all with its ups and downs like that. Yeah, so tough chart, I think. We got a lot of momentum to the downside, but support is not far away. I think waiting could be the best because either for a pullback back to resistance, looking for a bounce down, or maybe even letting it go a bit lower for a bounce back up. Ultimately, maybe looking for a breakout, but it could take a while before a breakout happens. So bounce up or down might make the most sense. Let me take a look at the hourly. Yeah, without doubt, there's momentum here. As long as this momentum is valid, it could still push a bit. I don't know, what time frame you're looking at. What time frame are you most interested in? You're looking for a bounce. Okay. 4 hour and daily. Well, it makes sense, but definitely I agree with you that the strength is something to be very cautious of. It's really pushing a lot, and I think considering the 50-minute chart here, that there's a high chance that this bottom will break first. No divergence on 15, 30, nothing. So I think we would have to count on that first before any, decent chance of a bounce trade could happen. Yeah. So let me take a look at the others. You said, take a quick look at gold here. Fifth, fifth day, sixth day now, not breaking that bottom. So if it doesn't break within the next few days, that could be maybe a start of the correction again. Not that interested at the moment. Let's see, we can. Let me add the. Strange. Cannot find it at the moment. I don't see the others. Maybe I'm missing it somewhere. Do you know where it is, Beverly? Do you? I only see the DAX. That's strange. Silver, gold. I don't see the others. There's Google, but not the Dow. So no, sorry about that, but the probably would be quite similar, right, to the DAX, I guess. Let's see, the dollar index. Yeah, looks like it can correct a bit further. It is breaking this trend line. I wouldn't be surprised if we see a bit of correction, but ultimately stay probably within this wedge and just correct back to the bottom and see a bounce, something like that. So, but yeah, it's just an index. So, last but not least, let me take a look at that euro odd. I think actually in the end I didn't place. I did. Okay, good. Yeah, so it's now retracing. Now, if it takes too long to retrace, because this is already candle 11, if it takes too long, if it's really like goes down and up and down, as I said, it's not good. So I want to see a bit of speed. It's getting taking a bit slow, but would like to see the next 10, 15 minutes make a down and an up. Okay, let's say 20. Not within 20, I might just forget the idea. All right, but for the moment, let me take a look at the 15. 15, we see some three bullish candles, stronger than this one. So let's say that this is the fourth. I would give it the fifth. Well, let me think about this one. 1 hour. Let me take a look at the 1 hour. 30-minute has engulfing, so that is good. 15 shows momentum too. Perhaps not looking that bad, actually. All right. Well, let me say it this way: if it bounces here, and yeah, if it preferably, I would like to see one more rally actually within the next 20 minutes, a rally that brings us to a target. If it doesn't, um, it's not out of the question. It's not horrible, but I would probably still take it off. If it still rallies after that, which it can happen, it could do something like this, make a triangle and still rally. The alternative could be just to take the breakout like this. This could happen. We make a wedge like this. Within 20 minutes, we don't get the rally to a target, but we start making this wedge. I exit, and still, even despite the wedge, we still get a break to the upside. So even if an entry and exit was done here, a re-entry could be taken here to the upside, or perhaps even to the downside. So I only have a few minutes left before the webinar. I gotta end the webinar here before the top of the hour. So that's how you can tackle this euro odd. Otherwise, last look at Kiwi, and then we'll wrap it up. Tomorrow we got webinars again, same time, same place, with this live room here at 7:45 GMT, and then it's going to take a look at. Let me take a look. In the meantime, his expert opinion at 4 p.m. GMT. And then Thursday evening, same time, 4 p.m. GMT, we're going to take a look together. Kiwi 6660. A short right in here is not bad. I mean, considering the downtrend in play, it is close to resistance. You got some bullish candles. So the thing is that I wouldn't be surprised if the 4 hour candle high still gets a bit broken. So maybe even a retest higher is possible. Personally, I would wait for that. All right, seems like can I get the page up? So I would probably wait a bit more on the Kiwi and look for a push higher to exhaustion. Let's see on the 15. There's no divergence. Perhaps one more push above this top. And if there's divergence, then that could be a tad better because of that. Looking at the 50, I think we'll get that one more push. All right, so once again, let me pull this up, the webinars. Also, if you're interested in the extra features of the Supreme Edition, just take a look at the main website and you'll get all the info on that Supreme Edition, about 50 plus extra features for that plugin for MT4. So definitely worth your time. Tomorrow, strategy, and then trading stop EA with Nenad, and then Nenad and I look together at trend concepts. That's Thursday at 4. All right, 4 GMT. Thanks again. I got to wrap it up now as other webinar starts. Thanks for joining and see you soon. Cheers.